Good evening, friends. I'm Pooja Gandhi. Welcome you all for the virtual IPO roadshow of Voler Cars Limited. The company is primarily engaged in providing employee transportation services to large MNCs and corporate clients with presence in various major cities in India. We operate largely on an asset-light model where the majority of our vehicles are sourced from vendors rather than owned. Now, I would like to introduce Mr. Parasrampuria, whole-time director. Welcome, sir. Mr. Ankit Ji, CFO. Welcome, sir.
Thank you so much, Pooja.
And Miss Neelam from GYR Capital.
Good
Welcome.
evening, good
Neelam.
evening, everyone.
Good evening. Now I request Vikas Ji to give company overview followed by detailed presentation. Over to you, sir.
Vikas, you're on mute.
Hi everyone, good evening. So I'm sure some of you must be knowing about Voler cars already, but I'll definitely like to give you guys a brief about what we do and who we are today. And this call will be, we'll start this call with a small overview and then followed by one small presentation where I'll take you through our journey and will sort of give you an overview of what we are trying to achieve through this IPO, and then we can take your questions and answers. And probably Neelam and Ankit, they will pitch in wherever, like wherever their part is, like the object of the issue. And for Ankit, maybe if there are any financial questions, Ankit can take them. So I'll just share my screen and I'll start with the overview. Yes. So starting with our overview and Voler cars. So we are primarily an employee mobility solution provider in India, and what we do is we bring employees of the large MNCs and corporate clients from their office to home and home to office. It's a 24/7 service, but primarily our focus area is the night car service. Our major clients are only MNCs and IT and ITES companies, large corporates who have huge employee bases, like above 40, 50,000 in single campus. They are our target audience. We, as Pooja mentioned some time back, we are an asset light model, and majority of our fleet is sourced from vendors and drivers. So the strategy allows us to scale very quickly, optimize our seat usage, etc. And the company was started by me and my father back in the day in 2010, and we are now around 15 years old. We'll be completing 15 years in the month of June. So that's who we are. We have about 2,500 vehicles. We are present in 9 different cities. And of course, we do about 450,000 odd trips per annum. And we about 14 top MNC blue chip Fortune 500 clients. Of course, as the company has evolved, and back in the day in 2010, we had a very vanilla model wherein we were just providing cabs. But as we moved forward in life, we saw technology taking a major role, technology taking the centerpiece in our life, and GPS systems, uh, tech led operations, women safety became a priority in our business. And also, our presence became a priority for us so that we can cater to our clients in multiple cities. We can provide them with the same kind of service. We can meet the same kind of SLAs, and that's what we have evolved as. I'll take you a little bit through our journey. A little bit, we'll move to the past, where the company was started in 2010, and we launched our employee transportation services with a very humble beginning under the name of Jamuna Travels in Kolkata. And Wipro was our inaugural client. And we started expanding our services, and then we moved and changed our name from Jamuna Travels to Voler Car in the year 2015, when we started a self-drive car rental operations, where we were competing with the likes of Zoom and Rev in India. But in 2019, it was a godsend opportunity. COVID came, and we were dealing with a lot of issues in terms of instability, price sensitivity, The market was not developed for the self-drive car rentals, and we ceased to exist that business. And we again started from the year 2020. We started focusing back on our ETS business, and here we are in the year 2025, where we've expanded to 9 cities, and we are taking this company to our IPO dream. Talking about the services, as I mentioned, it's a night car transport. We have dedicated location teams in each of our clients' site. We have verified chauffeur driver partners that take care of the entire safety situation, and our entire operations is driven by technology, which is GPS tech, safe reach confirmations, which also is algo based routing, etc. Everything we do in house. I'll give you a little bit of brief about the business model that we have. So the business model is very simple. We onboard these drivers and the cars on our platform, and of course, they are onboarded with a very stringent check. Drivers are expected to get a price per kilometer, or they are expected to they could be on various different kind of model. All the cost of fuel, maintenance, and car related cost has to be borne by our partner. We do not have anything on our books. And then this car or this driver is onboarded on our platform, and the fleet is made available to our clients. And once the fleet is available through our routing model, through our allocation model, we assign these cabs different duties throughout the night. They complete their duty, and through our automated software, the billing gets done both for the client as well as for our vendors. Generally, we see that our contract life, generally we sign a contract for 3 to 5 years for our clients, but most of our clients are now with us for 10 years, 12 years, 14 years. So we've had repeat contracts with most of our clients. And of course, we have also developed a very unique cost per boarded model employee, which is like a Ola share or Uber share. If I have to give you a little bit of understanding, it's like the client only pays for the seat that he occupies. Like if an employee is coming only 15 days a month, he will only pay for that one seat which he has occupied. So every time he sits in a car, he only pays for the seat and not for the entire car. This is a little bit about our fleet situation. So we have about 2,500 plus vehicles, and out of the 2,500 vehicles, everything is asset light, as I mentioned earlier. Around 400, 500 vehicles would be 20% of our fleet will be electric vehicles, because sustainability has been a big push also apart from technology from our side. We believe that sustainable and affordable solutions will be the future of employee mobility segment. This is again a little bit about the operational checks that we do on a daily basis. It's a little to give you an idea about how this entire order comes to us and what do we do with that order. So the clients generally upload their employee travel database, and basis the travel movements, the cabs are called on the site and sent directly to employee locations for pickups at relative time slots. Cab movements are constantly tracked through GPS, and ground staff, which is generally our people, they handle the execution. They handle the operations, and they maintain service levels. They ensure that the employees are coming 100% on time. They are departing 100% on time. So because productivity is a very big key USP of our company, wherein we make sure that 100% of the times, out of 100 times, 99 times, the client should have their employees on time at office and home. So this is something that we take pride in. And these reports are generated, of course, depending upon the requirement, daily, weekly, etc. And we share the MISs with the client, and the processes are repeated day in and day out. Again, talking about the cab sourcing model, well, again, it's a very stringent process. As I mentioned, we do a lot of checks, the quality checks before we onboard a car. Generally, these cabs are onboarded on a trip model or a kilometer model or a packaged model, depending upon the requirement of our client. So sourcing model is generally the best commercial fit that we see at that point in time. And the cab induction and listing happens. There is no assurance for business as such, but the only assurance that we tell that payment is secured. Like when they say Voler, the payment is secured for them. Of course, we share some historical data with them, the pattern that what kind of money they can make with us, and they generally these drivers also do their reference check. So we felt that our assurance is the on time payment. Our assurance is the dedicated business. They can plan their time, fleet, inventory, etc., and kinds of help our vendors and partners. And these cap details are listed on the client platform, wherein a lot of these medical certificates, the RCs, the insurance, the fitness, the permits are being made transparently available to our clients as well, to make sure that we tell them that our cabs are 100% compliant. And of course, there's no listing fee for drivers, and the driver and it is a very very sort of a there is no onboarding charge that we take from our drivers to be onboarded on our platform. So these are some of our key clients. We have worked primarily in all the sectors, including IT, ITES, manufacturing, BFSI, uh, healthcare, hospitality, aviation, and telecom in the past. Right now, our focus has been IT, ITES, manufacturing, and BFSI. So our clients largely are Wipro, TCS, iMerit, Cognizant, uh, Flipkart, Capgemini, Ernst and Young. So these are the clients that we serve across India. I've already spoken about the fleet, and I'll take you directly to the investment part. So again, we have an asset-light business model, as I've been highlighting through my presentation. There is no fixed cost. Of course, we have a huge operating leverage. The new business directly adds into our bottom line, as there is no fixed cost incurred. We don't need to do any capex. We have a good supply side situation with our fleet owners. So if there is a contract today which we get, say it can give us a revenue of say 24 crores a year or 2 crores a month, we can easily get those number of cabs onboarded with our existing goodwill, with our existing supply side relationships. And that is the kind of asset light business helps you grow. And of course, there's a lot of margin increment, because operating leverage with asset light balance sheet generally gives you good cash. And since, as I mentioned, our clients are all blue chip clients, Fortune 500, there is no default. So our payments to our vendors is also on time. And of course, there is no owned fleet, so we don't have any hassle of maintenance. We don't have any hassles of payment of drivers. We don't have any hassles of fuel theft, pilferage. So that makes our life very easy. I was just speaking when I was talking about the overview that our clients are generally very strong. They are MNCs. They are there with us for 14 years. Like as I said, Wipro was an inaugural client. They're still with us. TCS was also onboarded the same year. They're still with us. We have Teleperformance for last 10 years, Cognizant for last 7 years. So a lot of people. So whenever we onboard a client, we try to be with them in thick and thin, and we try to adapt, evolve. And in 14 years, as they have evolved, we have also evolved our services. So this is the pricing model, which we offer to our clients. The simple ones are the kilometer driven back to back, trip based, like a per trip model, or a package model, which is like 12 hours, 26 days, 3,000 kilometers. But the unique one is the cost per boarded employee, as I mentioned in the presentation in the beginning. It's like you only pay for the seat that you occupy. So as operations, our idea is to increase cab occupancies, to make sure that whenever we take a contract, the cab occupancy is optimum. It gives benefit to our clients and also gives benefits to us in certain business models. Of course, employee routing is also it has to be balanced, because, for example, if an employee takes 30 minutes generally from a public transport, from him to come from his home to office, and we take 50 minutes, he will be dissatisfied. So it's a balance. It's something that we look forward to in maintaining that. And of course, there is TAT, and probably ideally it's like 1 week to work on entire database, and any changes in employee rerouting, entry, exits, everything we optimize during our day-to-day operations. So we have blue chip clients, as I mentioned, and portfolio we already know, like Wipro, TCS, Cognizant, IBM, Marblebox. And the payment cycle is about 7 to 30 days after we raise invoices. and generally in some cases we have 45 to 60 days as well. uh, of course, the idea to work with blue chip clients is there's no payment defaults by any client. And in major cases, either we are the largest vendor or we are the only vendor. That is how we differentiate ourselves and we are unique. And right now we are present in east, west, and north. But yeah, south we plan to expand with our current IPO. So of course, we all know that B2B businesses are more stable, and I'm just like to reiterate that we have a customer certainty. There is low price sensitivity, unlike a B2C business. We can predict our fleet. We can increase our cab utilization. Where we can plan our inventory. The driver stickiness is there, so you can train them well. You can make sure that they are uh, catering to all the right touch points. Little bit about the industry. We know that right now it's a $6.1 billion industry, and it is soon going to be doubled in next 7 years because a lot of GCCs are coming in India. India is becoming the service hub for the world. Probably Bangalore now has the largest talent of tech workforce, and tier two, tier three cities are also doing really well. Like 57% of the urban workforce comes from the tier two, tier three cities. So having said that, this industry is going to boom. There are more and more employees who will be onboarded in these large IT companies. And as we see these IT companies, MNCs are growing. And with their growth, of course, we also anticipate our growth and our journey to be as big as we can imagine. So this is a little bit about the growth strategy I want to talk about. Is right now our focus is geographical expansion, followed by expanding of sales team in these geographies, and of course creating more supply side relationships that helps us with fleet expansion, and in turn also spending a little bit of brand building and operational excellence. When I say operational excellence, is more to do with services, feedback mechanism, adoption of latest industry practices. So yes, so right as I mentioned, there are two main directors here. Like one is me, and second is my father, Mr. Pawan Parasrampuria. And then income statement and balance sheet financial part. I think Ankit, you can take it over from here.
Sure, Vikas. So, the past 3 years, as the numbers are quite visible, we have been for the years from 22 to 23, we had a decent 24 crore turnover top line with a nominal 10% PAT ratio. For 23-24, we our turnover went pretty good in terms of numbers. We had a good 20 odd percent growth in our top line, and which also showed a good healthy margins in our PAT, which was somewhere around 16 odd percentage. For the current financial year, when I talk about for the half yearly financials, our numbers are somewhere around 21 and a half crores top line, but our PAT is again on the same ratio, which is increasing over the years. And somewhere down the line, we feel that this will continue to surge over the years when we are expanding in other geographies and other parts of India. So this is somewhere around the balance sheet area. The balance sheet is, as Vikas said, that we are operating on an asset-light model. So there are no as such assets and no major liabilities as of now. The only assets are the trade receivables, and the only liabilities are the trade payables. Majorly, the balance sheet comprises only these two items.
Yeah, so I think issue details can be taken care by Neelam.
Sure, sir. Thank you. Thank you, Ankit. Sir, next slide, please. With regards to issue details, company is coming up with an issue size of 27 crores, having an issue of 30 lakh equity shares. The price band is fixed is around 85 to 90 per equity share, and the lot size is around 1600 equity shares and in multiples thereof. With regards to issue period, anchor bidding will start on 11th February 2025 and will close on the same day. And the issue for public will open on 12th February 2025 and will close on 14th February 2025. With regards to pre-issue equity shares of the company, Right now, the shares of the company are 81,43,527 equity shares. And the promoter and promoter holding as of now is 92.88 crores. Next slide, please. With regards to the object of the issue, as the company is raising around 27 crores, majority part of the company fund will be utilized for funding the working capital requirements of the company, and the rest will be used for general corporate purposes and issue expense. That's it.
Thank you,
In
Neelam.
case you have any queries, you can reach out to us at the rate info@divarcapitaladvisors.com. Thank you.
Thank you.
Thank you, Neelam ji. Thank you, Vikas ji, for giving excellent presentation. Now open the floor for Q&A. I request all the participants to raise your hands. We can start with the Q&A. Nupur ji, please go ahead.
Hello, everyone.
Hi. Hi, Nupurji.
Hi. So firstly, congratulations. Your company is coming up with the IPO.
Thank you.
One thing I would like to ask, and that is about the pre-IPO, the private placement that has been done by the company.
Yes. So it has been primarily, it was a pre-IPO. It was not a pre-IPO round. We raised a small capital with our friends and family, largely for the growth in the current year before the IPO. That has helped us bag a lot of a couple of big contracts in the northern region. As I've mentioned in my presentation, that we recently expanded to northern India, like Delhi, NCR, Lucknow, and Jaipur. So that round helped us achieve some of that working capital requirement, and it was just between our friends and family that pref round that happened.
So the pre-IPO round was done at what valuation?
Same valuation, not much here and there. I think it would be almost the same.
It was as per the price. If I consider the price band, that is 85 to 90. So pre-IPO round was done at this price only, or there was some other price?
It was done at this price only. There was no discount as such.
But sir, if I consider your RHP, at one place, history of paid up equity share capital, it's mentioned that on 29 June 2024, preferential issue was done where 11,370 shares were issued at an issue price of 4,600.
Yeah. And then there was a bonus which was given on 1:50.
Yeah.
Yeah. Ankit, can you explain
So
the
it
numbers?
was set off in that way.
Yeah, so Nupur, if it was issued at a price of 4,600, and if you will divide the numbers by 51, you will automatically get the price somewhere around 90. Because the bonus was 1:50.
Yeah, it was done in that ratio.
Yes, yes.
If I consider the top line and bottom line of the company, a surge has been witnessed.
Yes.
Like from 30 CR in the next 6 months, the company achieved a top line of 21.5 CR.
Yes.
So what was the driving force? What were the key factors that helped the company in achieving this growth?
So we have expanded in North, and we have taken a couple of big contracts. One is for Teleperformance, another is for Flipkart, and we are continuously adding more and more clients. That is the driving force, Nupurji.
Okay. So majorly, Wipro, one of your client is Wipro, that is contributing somewhere around 64% of the revenue. So are we having any long-term contracts with these companies or something like that?
So all these are long-term contracts only. As I mentioned in my presentation, also these contracts are generally between 3 to 5 years. And of course, since we have been their partners for 14 years, we continuously renew our contracts with them.
So the companies which are majorly contributing as your top 10 clients, we are having agreements with all these companies.
Yeah. Without an agreement, these MNCs, they don't work. Generally, there is a master services agreement that we sign with them. And of course, we have to sign a lot of other agreements, including if they're a US listed entity, we have anti-corruption agreements, we have work ethic agreements, we have service level agreement to sort of keep up with our services, to maintain the service levels, KPIs. So it's a very stringent, it's like not a 1 or 2 pager agreement. These agreements are sincerely good, healthy agreements of 20-30 pages, which covers primarily everything.
Okay. So currently, the PAT margin of the company has improved, but in future, are we expecting any such, or you will maintain the consistency in your PAT margin?
We will be consistent. What I feel is we will be consistent with our. Of course, we are striving how hard to increase it, but what I see from here will be consistent.
Okay. Uh, Company was having some intangible assets,
Yeah,
and
that is a
then the same
technology.
were okay, and then they were written off,
Yes, they were amortized.
amortized. Yeah, sorry. So technology in terms of what? Any
So the tech that we totally
specifics?
use right now for our entire business, it's including the GPS tech. So GPS is just not the hardware. There is a tech behind. There is also routing algorithms that we have. So when we were building that tech back in 2018-19, what we did is we capitalized these expenses and we amortized it over the year.
Okay. Thank you, Vikasji.
Thank you. Thank you, Nupurji.
Thank you, Nikunji. Charji, please go ahead.
Hi, Vikasji.
Hi, Tusharji.
So, Vikasji, just trying to understand what is the total landscape for this business in the country today. When we say what could be your addressable market in terms of value, and how would this dependence on Wipro, like the 64%, what would it be, let's say, 3 years from now?
So, market is so if I have to just give you one broad number, and let's talk about Wipro only. So Wipro only spends alone about 500 to 550 crores per annum on their employee transportation needs, and Wipro is not one of the largest players in India. Like, they're in terms of IT, like TCS is one of the largest, so TCS spends are even higher, Infosys spends are even higher. So if you look at all the major contributors, we see that, of course, there is any number today we say will be small, and lot of GCCs are being established in India now. A lot of offshore units are coming for, like, PricewaterhouseCoopers or EY. They all have their all have their teams who are serving their offshore units. And recently we've had a discussion, just having a discussion with Airbus. They are coming up with a very large GCC for themselves in Bangalore. So a lot of these bigger companies, and like, just to name, like British Telecom has their entire operations base in India, wherein they get their entire back office work done in India. So India is a service hub, and we have the right demographics in terms of the manpower, youth, and talent. And of course, the cost plays a major role, as we all know. And this industry, we have a huge headroom for growth. To answer your second question about the client concentration, of course, this was based, this is the last number years, and I believe that Wipro, being our inaugural client, will still be growing with them. We don't have any reason to not grow with them. We will be like, but in absolute numbers. But now, since we are expanding in multiple geographies, adding more clients, of course, it is coming down to now 50-55%. And over the years, like in next couple of years, it will go down to about 30-35%. But yeah, in absolute numbers, Wipro will still grow with us because they still believe in us, we still believe in them, and we want to grow with them.
So, Vikasji, would it be right, assuming like we take this figure, if Wipro is spending 500 odd crores in employee transportation, then maybe the national figure could be upwards of 25-30,000 crores kind of thing with just these large companies?
Exactly, because these are, if you have aviation sector, which has large employee base, you have manufacturing sector, like companies like Motherson, Sumi, and all, who are very fairly large. Now, telecom, like Geo and companies like that, Airtel, they have a large employee workforce. So if you look at that, it is definitely a very, very large. Well, like, quantifying it to 25-30,000 crores could also be less, because it is more and more, and even in tier 2, tier 3 cities, these companies are now going and recruiting people.
So how would you increase your presence with them, or how would you get a better wallet share from them? Like you make an entry, and then how do you increase your wallet share there?
So, our focus from the last 4 years, Tusharji, has been either we will be the largest supplier for them, or we try to take the entire business from them. How do we take the entire business? We, as I mentioned in my presentation, we have a cost per boarded model, cost per boarded employee model, wherein we say that you pay only for the seat that you occupy. So we try to bring down their cost. And then what we do, we come back home or we come back to our office, we do our working. We make sure that the occupancy rates of these cars are in the north of 60 to 70%. That helps us optimize also our cost and increase a per trip revenue. So it's a unique model that we have developed where we try to take the entire business of the client in a turnkey model for that particular location. Like, I'm not talking of pan India. Like, for example, like for a Powai location of Hiranandani Wipro, there would be, say, 10,000 employees. We would say that, okay, 10,000 employees are coming every day. You pay us 200 rupees for every time your employee boards. So, like, out of 10,000 employees, so only 7,000 employees boarded the cabs throughout the month. So we only get paid for the seats, that number of seats that they occupy into the number of times that they traveled with us. So that is the business model we go forward with. And of course, it has to do with a lot of tech, because then you have to come back, you have to have a balance between routing, occupancy, employee satisfaction, and everything. But it helps us. And what we have seen is, in the past, a couple of these contracts, they are driving our a lot of margins also for us. Like, it's really good. It's really better than the standard vanilla model where probably you earn just a spread. But in this kind of a model, you have the freedom, I would say, to increase your margins to keeping in mind the client satisfaction.
Great. Thanks, Vikasji, and all the best.
Thank you, Tusharji. Great talking to you.
Same here. Thanks.
Thank you, Tusharji. Jayji, please go ahead.
Hello, Tusharji. Hello, Vikasji. Sir, I wanted to know what is your client acquisition strategy?
So, two parts of it is there. One is that we already have existing relationships with all the major clients in India. Because I've been in this industry for 14, 15 years. So practically all the procurement heads know me and know my team also. Second, we are with this IPO, as I mentioned, that we are also going to expand into Southern India and have a very strong sales team there who can look. I can, as one man, I can approach maybe X number of people a day. Probably my team can approach X to the power 2 number of people a day. And that's the power of a big team. So that's what we are investing in. We will be having we already have a team in North and West, but we are going to invest with a team in South, and that is going to drive our growth.
So it's completely through online leads only?
No, it's not online leads. It's not online leads. Generally, it's only people with experience, they are invited to these RFQs or tenders. These are generally not tenders. These are like RFQs where they float an inquiry and you have to go and participate. You have to show your strength. You have to show your presentation, because these partners, JG, they have to be reliable, because at the end of the day, they are handing over their employees to you. Until the time the employee reaches his house or her house, it is the responsibility of the client. That employee is the responsibility of the client and for us. So they want their partners to be reliable. Second and most important thing, you can you apart from the reliability, they also want lot of safety parameters, lot of value additions, which probably normally a new guy may not be able to add. And also predictability, because there's volatility in operations. Like, for example, if there are 200 employees who are logging out at 4 p.m. and instead of logging out at 4 p.m., they logged out at 3 p.m. because there was an operational glitch. So you have to add additional number of cars at that point in time. So you need to have a supplier who's well equipped to take care of volatility in operations too, so that your employees do not wait. They do not have to stay back in office late in the night.
Okay, sir. Got it, sir. And sir, talking about competition, sir, who are closest competitors?
So if I to look at only one apple to apple, I will say Mahindra Logistics is one, because they have an employee mobility sector, not the whole company. If you look at their balance sheet, they provide exactly the service that we provide, and they are doing a turnover of 322 crores at the moment. But of course, their focus is their of course, their focus is their trucking business and logistics business, so they've not focused on this entirely. But I think with our renewed focus and with our dedication towards this sector and innovation, we will be able to do a much bigger numbers in days to come.
Got it, sir. Wish you best of luck, sir.
Thank you, Jayji. Thank you so much for talking to me.
Thanks.
Thank you, Jayji. Rishiji, please go ahead.
Hello.
Hello, Rishiji.
Yeah, please have water. You've been speaking for quite some time.
Yes. Yes.
It was
Yes.
wonderful. I think you have been able to revive from this entire tech boom which came into this existence. There are a lot of so I've worked with PwC in past, and I know how important it is for the employee safety.
Mm-hmm.
An example in past, because you don't own the cars, you don't own the drivers, but and there must have been breach of breach of SLA, breach of security, कहीं कुछ हो गया. So how are systems built example के साथ that you will be able to address it and mitigate the risk of getting legal notice or ban from the company?
So, of course, every business has risks. I can't say that I can blanket avoid a legal notice, but let me put it like this. So, for example, if I have to send Pooja home today from my office and she has to reach in next half an hour, so what happens is, like, Pooja is carrying a cell phone, and of course she does have her app, and so the moment she reaches her house, there is a her house or that address is geo fenced. So the moment she enters her geo fenced territory, automatically a safe reach confirmation will be sent to our systems that she has reached safely. That's one. The second important part is that during the journey, if there is any incident, there are panic buttons in the car. So if you press that panic button, there is a panic button closure team which sits 24 into 7. They have to close the panic button irrespective whether it was a false positive or a false negative or a positive positive. Doesn't really matter. They have to close it. They have to report why was that button pressed. And third and most important point, training of our drivers, because ultimately every tech is an enabler. You have to train your drivers, you have to do your background work really hard. These drivers are all background checked. We do their criminal check as well. Then a local police station, they have to get them verified through a local police station. Plus, wherever we are operating, for example, if you're operating in Powai or Thane, I'm just giving an example of Bombay or for Calcutta. Say if our client is present in sector 5, in the sector 5 police station also, it will be informed that this particular guy is working with us. And of course,
Vivekji, I get it. So you have the best in class like the Olas and Ubers, and maybe even better because you're very closely managed. My question was instance which has happened in past, and how are you able to manage it? Maybe if you can disclose a
touchwood, we have not had any women safety instance. Touchwood, as like I'm like I don't want to. We've been blessed that we have not had any women safety incident in the past. See, small little accidents happen. I'm sure it happens everywhere in India. So whenever I will give you an instance, if an accident happens, immediately a panic button is triggered, and a support team is being sent from our client location to that particular site. And if an employee is hurt, like in the last situation, their employee got hurt, they were immediately hospitalized. They were taken to the hospital for checkup, and then they were eventually released. And the driver also is being taken to the hospital. The car is being then sent to the police station, an FIR or whatever a general diary is being registered, and we make a proper incident report and share it with the client, finding the root cause of that incident. And if there is a fault which we see at our end, we try to tell them that how we're going to mitigate this in the future.
Do you install dash cameras in all your cars?
No, we don't have right now.
Okay. Do you plan to do that anytime soon?
Yeah, dash camera is something we are working on, but we have a little like every client has a different requirement, and so we just discussing with our clients as well that if we have dash camera, so if we record and also what kind of, so the clients also have a little bit of inhibitions with the dash camera, so we're working on it, like how to go the best way about it.
Got it, got it. And secondly, if let's say like you're working in Jaipur, and so we are a Cat 3 AI fund out of Jaipur,
wow,
Rajasthan, and you mentioned you have a presence here with Flipkart. how do you typically define a corporate size? What's your MOQ like? What's a per kilometer per employee cost to a corporate? Just wanted to understand that.
So if I have to give you a number, that number ranges between about something around 750 to 780 rupees. I'll just give you the number very quickly.
No,
Just
per kilometer per employee.
per kilometer, generally per kilometer, it depends upon the geography of the city and also the type of car that you want. Like for a small sedan, it would be about, right now it would be about 16 to 17 rupees per kilometer.
Per kilometer per employee. So if you're
Not per kilometer per employie, it's about
Okay.
for the entire car. If
So
you're,
as you mentioned, you're a per seat model, right?
yeah, so per seat it will be about 200 rupees per employee, depending for a smaller city.
200 per employee per day.
Not for the per seat occupied. So every time he occupies seat, irrespective of the distance, he has to
Uh-huh.
pay we will charge the client 200 rupees.
Oh, so it's a flat fee model which you have with
That
the company.
exactly.
कि कोई भी बंदा जाएगा 200 रुपये लेंगे, simple flat खत्म. And
Exactly.
like a slab like 5 to 10 20 kilometers, like I'm sure slabs होंगे because गुड़गांव में तो बहुत दूर दूर है. People stay in what? Noida.
So generally there is also transport boundaries that we create, like what is the maximum kilometer that we can go when we pitch that kind of a model. But
Mhm.
yeah, of course, as I said, this is 200 rupees is for a smaller city. If they want us to cover the entire Delhi NCR basis, the distances that we'll travel, that price will change. It will be, of course, a blended price.
Like I think 6 to 12 kilometers is what 200 rupees is what you were stating. Because I remember when PwC 6K is what you used to charge for the entire month.
Not 6 to 12 kilometers. Generally, our trip size is generally about 15 to 20 kilometers.
Acha. For 20 kilometers, 200 rupees, that's approximately 10 rupees a kilometer.
No,
So
but
that's
then we optimize the car occupancy. We take
fine,
that.
that's fine. That I know. So for
Yeah,
an employee, is costing 10 rupees a kilometer, which they
exactly,
will be able to get in an
exactly,
Ola or Uber, but
exactly.
sharing it and then they are themselves doing it.
You got it. This is
Clear.
a little secret between you and me.
No, wonderful. And with this, do you also have like finance tie-ups with some NBFCs or banks to facilitate this growth?
Right now, no, we do not have any debt on our books and we don't have any finance tie-ups.
So not on your books, for example, like because you don't own the fleet, you work in an asset-light model, but you have to ensure that your partners, your drivers get a new
No,
car.
we don't get into that. In the
अच्छा
past,
नहीं
we even don't give a letter of comfort.
अच्छा कुछ नहीं करते आप ऐसा.
No.
ठीक है. That's all from my side. Thank you.
Thank you, Rishi. Thank you. Thank you so much.
Thank you, Rishuji. Rajiv ji, please go ahead.
Hello.
Yes. Good evening, Rajiv ji.
Good evening, Vikas. My 3 or 4 questions to you. First is that just to reconfirm, this entire revenues are coming from this employee transportation.
Yeah, 100%.
And my second question is this: in a few years back, you discontinued this employee transportation services in Chennai and Bangalore. I understood part of that you discontinued self-drive service. I understood that part. So what was the reason in Chennai and Bangalore you have to stop employee transportation, as I have seen in the presentation?
Yes. So when we were starting our self-drive car rental operations, that time we made a conscious decision that we will close smaller operations at that point in time, and our company will completely focus on the self-drive car rental operations. And we tried to grow that business, but Rajiv ji, it's like no
No,
fear to accept that
it's
failed, and we could not scale it, and the business model we could not adapt for ourselves. And there was cash flows issues. The industry was not prepared.
sorry to interrupt. I understood that part. As I am seeing in the presentation, it was also written that employee transportations in Chennai and Bangalore, you also
Yeah,
stopped.
that is what I was saying, that at that point in time when we decided that we'll focus only on when we started envisioning the self-drive operations, these operations were fairly small at that point in time in 2014-15, when we started planning for the self-drive car rental operations. So we chose to stop these smaller operations and only focus on the self-drive car rental operations.
Okay, okay, okay. I will get back if I still don't
Sure,
understand.
sure, sure.
And my other question is that when you, as you have said in the earlier part of the conversation, that you are that this large MNC, large companies like Wipro and TCS are spending large amounts of money on employee transportation. So, like besides you, what other there must be some other companies also engaged with them, with companies like Wipro and TCS for employee transportation.
Of course there are. Of course there are. As I mentioned, we have many competitors.
Hmm.
Mostly there, well, as bigger players, I mentioned Mahindra Logistics is there. Then you have WTI, which is also again a listed player. Then you have Eco Mobility, which is again a listed player. So there are many players who are in this space.
So these other players in Wipro and TCS, who are they? Can you name them, sir?
I'm sorry.
Can you name these players who are employed with Wipro and TCS besides?
I just named them. Like Mahindra is also working in some of the locations.
Hmm.
Uh, uh, WTI is working in some of the locations. Eco Mobility is working in some of the locations. And then there are very small regional players. So it would be impossible for me to name all of them.
Okay, I got it. So how when you so how they are placed in terms of technology? Because as I am understanding, technology is the backbone of this business. So how you are placed vis-a-vis these players, or
So everyone, not everyone has technology. So as I said, only Mahindra and us, we have the right kind of tech to take the CBP model. Not other players do not have it. So right now we are in the process of building that model and pitching it to more and more clients. So we have successfully piloted that particular business model over the last 2-3 years, and now we plan to take it to more and more clients in southern India as well as northern India and western India.
so what is the entry barrier for these other players? As I understood, services, quality of service is one of them. Technology could be another of them. So, and
Of course,
can you
experience to manage large operations, availability of fleet, and uh, your uh, your capability to scale with them. So like probably you would like these companies, they get a lot of new clients and new projects every day, and so you have to make sure that when they are growing and when they're expanding, you have to have your fleet available. You can't say a no. So these things are important, and of course you correctly mentioned the 2-3 major points which are the barriers to entry in this particular industry.
okay? And just to understand this little bit of operational part, suppose when you when an suppose for employee pickup from their home. So how does an employee contact you, or do you get the do you get in advance the program from the company that you have to do pick up of so many employees at these particular points of time?
Yes, we do get everything in advance. So generally we know our fleet pattern, generally we know the demand, and that is how we can plan and predict and our inventory. Of course there is a little bit of volatility throughout the operations. Like if they have asked for 50 cars for that particular day, we may also need 60, and that is where our role comes in, as in to provide that with additional inventory, because not everything can be meticulously planned to the T before the start of the operation. There could be 100 different variables which comes into the play when that entire operations happens.
Okay, so for employee pickup, suppose you generally from for a distance of 10 to 15, as you are saying you have covered mostly around 15-kilometer distance. So in that from for that 15 kilometers, generally you on the way you are able to pick up 2 or 3 employees, and then uh,
Correct.
yeah, okay. And how do you calculate that this capacity, 70% capacity utilization? What calculation do
So
you?
out of every four, so in a car you have 4 seats. So if you occupy nearly 3 seats, it comes to about 66.6%. So that is how we calculate 70% occupancy in the car.
Oh, okay. So a car. So suppose if suppose in a town like Calcutta, suppose Wipro opens another office, hypothetically. So that car, do you have the one particular car can be sweated more, or your fleet can be sweated more?
Sorry, I did not get your question.
Suppose hypothetically, if Wipro opens another office in Calcutta,
Yeah.
so
Yeah.
your car can be sweated more. Like it must be going 2 or 3 times.
Yeah, see, generally we don't allow cars to ply for more than 10 hours because the driver get fatigued and it poses a risk for the client's employees. So, but yeah, if there are 2, 3 locations and if I can make him do 3 or 4 trips in those 10 hours, 2 trips from one location and 2 trips from another location, why not?
Okay. So generally now, driver is doing what? 2 trips per day or three trips?
So different, it is impossible to standardize it like that a driver will do 2 trips or 3 trips, because throughout the night the demand is also uneven. Like in the mornings probably, like in morning 4 a.m., 5 a.m., like there is huge demand of cars, where in the middle of the night 2 a.m. or 1 a.m. the demand falls down. So we also get some cars, our supply system is that strong for that only one trip for that peak hour. So some cars, out of say 200 cars, there will be 70 cars which will come only for one trip. There would be about 30 cars which will come for 2 trips, and the 100 cars will be there for the whole night.
Okay. Okay. I got it. So, okay. And just for the sake of one more question, 2 more questions. So, are there any other employees who want to travel alone? I mean, some senior employees who doesn't want to travel with other people. Are there also uh, employees like that? Do you have employees like that? Because for that one employee who get to there would be much lesser utilization.
So generally, we don't do day car transport, executive car rental. That's a separate segment. We are into employee transportation segment where our SLAs are fixed, where it is for mass transportation. So, and that is where the volume comes in. These executive car rentals, they are different kind of a business. Of course, we can enter. There is no hindrance. But right now, our market is so large that we are only focusing here. We don't have focus on the executive car rental, which is, you mentioned that if someone wants to travel alone, of course, there is a service like that, and there are service providers for that. But right now, we don't do it.
Okay. And one balance sheet question. If I am saw the numbers correctly, this current liabilities numbers are decreasing every year. So sales are increasing. So
Because if you see more and more, as we are going forward with Ola and Uber coming into the play, your uh, you have to pay more quickly to your vendor partners, like in a week, in 7 days, 10 days. So generally, our liabilities earlier in the day, we used to also pay the vendors after 1 month, 2 month, 3 month. But now the scenario has completely changed. They get their payments weekly from multiple different players. So we also have to be prompt in our payments. So that is how our current liabilities are decreasing.
okay. Thank you, and best wishes for the IP.
Thank you, Rajiv ji. Thank you so much.
Thank you, Rajiv ji. Darshit ji, please go ahead. Darshil ji.
Hello. Hope I'm audible.
Yes, yes. Good evening, Darshil ji.
Yeah, hi. Thank you so much for having me. Some of my questions have been answered. So just wanted to know, there is ample of opportunity here because as you said, the space is ever growing and a lot of geographical areas are also untapped. So number one, what kind of growth can you see, and what is the biggest hindrance to that growth that you see, and what is the biggest tailwind for that? So.
Sure. So the tailwind I will talk. So let us first talk about the hindrance. So hindrance could be, we have seen COVID. That's one in a century kind of a situation wherein the employees completely stop coming to office. But I don't see that happening again in another century, because employees will have to come to office. Employees will have to work. If there is any geopolitical situation which comes into play where India goes to a trade war with America, and lot of these Trump all of a sudden says that we will not work with India, any company working with India, or we will not allow any offshore services, or they tax it very heavily, or something like that. That kind of a situation probably will, uh, it will not stop the entire thing, but it will hinder the growth. We all know. So these geopolitical risks are there in every business. And the tailwind, of course, the India's demographics, it's the youth. You have a young population here. You have the best of talent here. You have manpower at the right price. You have real estate at the right price. Lot of big companies like Tesla, like SpaceX, like lot of these bigger companies, they're coming to India. They're creating their offices. Microsoft, Google, everyone is here. You name it, and we have it. And they have large workforces. So we and India's own consumption story is so strong that we have so much of manpower even needed here for our internal consumption. So that, of course, India itself is growing by 5 to 6% every year. So that is something I feel there will be the growth, because if India grows, the number of employees will grow, and if the number of employees will grow, our services is supposed to grow because we are in the market of employee transportation.
So that way, what's the vision for the company? Like right now, the way we are growing, like we are at like, I think we are at a run rate of like around 40 crores a year. So what do we see? Like, how soon can we reach 100 crores? Or, what is your 3-year vision, sir?
So I would just like to say that we have been having a 30% YOY growth, and I feel that we are trying to add more growth to our entire story, but we feel the present growth will be consistent, and we will be able to achieve the number that you said in next 2 years.
Okay. So 100 crores is the aim for the next 2 years. That helps a lot, sir. And so just like one other thing. So how difficult is it to get into like the southern and western? Like we've had some talks of the clients. So how is it? Because we'll be dealing with if in Wipro we'll be dealing with someone who heads the office maybe in Kolkata, but there'll be someone who will be different in Bangalore and Mumbai.
No, no,
Like
no, no, no. It doesn't
how would
happen
it
like
be?
that. So they have a central procurement team which takes care of everything. It's not like office to office. So we are already in discussion with for southern markets. Like we have entered the western markets. You can also back clients for the northern markets and southern markets.
Oh, okay. Though we don't need to make a new relationship. So
No,
that
no,
in
no, no,
that way,
no,
these are
no, no, no,
the
no, 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 no,
yeah.
not
So
at.
they'll see that we are saving costs in
Yeah,
one place, so we can apply it
yeah,
to
of course.
others.
If your proposal is compelling, they're bound to listen to you.
Oh, okay. That helps a lot for procurement. So just want to know, like, so out of all the competitors, like the biggest thing that we could offer to them is saving costs, right? Like that would motivate them the most, right?
So
Or what would
save
be
in cost is one, as it's one of their biggest spend after their employee salary. Second, of course, is today more than the price, your partner has to be reliable. You Because it's a safe, comfortable, convenient service. If your partner is not reliable, how will you hand over your employees to that partner? One. Second, as I've mentioned in some of the questions of Mr. Rishi or Mr. Rajiv, that there has been volatility in our operations throughout the night. So in some days you can have, probably you can need, say you need 200 cars. Some days you can need 250 cars. So that additional 50 cars you have to provide in the night. Third, when you look at a calendar of 365 days, there are 50 or 60 days like that where you have a BCP situation. What do you mean by BCP situation? Like in Bengal, you have Durga Puja. In Maharashtra, you have Ganpati. In South, you have Pongal. So these festivities, the drivers are not available. But US markets are not closed. The European and UK markets are not closed. You have to bring these employees to office. So you have to make sure your services are there. Then there are elections. Again, there is a problem of shortage of vehicles because most of the commercial vehicles at that point in time are pulled by the administration for their own duties. Then the third could be the rainy season or the monsoons, floods. So they need price, as you say, Darshil, is could be one of the factors, but someone who's a reliable partner will be more preferred, and who has been meeting their KPIs month on month, day on day, week on week, is someone they'll prefer more.
Oh, okay, fair. So I understood that. But this is the last question from my end. So on the supply side, like you just said right now, like sometimes they need 200, sometimes 250. How do we manage that? And so we don't own the cars, right? So how do we scale up the dynamically? Like so what's the difference to someone who is a cab, like, okay, I'll go for Ola or I'll come for you? Like, so what is the difference that we can offer to them? So,
So one is answering the first part of your question. We have, so if we need 500 cars for a particular client or 200 cars for a particular client, we have a pool of 300, 350 cars onboarded with us already. And through our supplier relationships, we are able to bring these cars to our client locations and get these services done. And talking about the second, yeah.
No, fair enough. Yeah. So, yeah.
Yeah, talking about the second part of your question of what difference, how different we are than Ola and Uber, we are nowhere comparable to Ola and Uber, because this is a fixed service provided by their client to their employees. So it is like if they are traveling in the night, they have to opt for a safe service. Ola and Uber does not have the kind of tech where if something happens, they would be able to probably create an alarm for themselves.
No, so sorry, I didn't mean it that way, sir. I meant someone who has a cab, so they have multiple options to choose right now, right?
Okay.
So why will they associate with Voler cab? Like what?
Right.
So you
Right.
said we might have some fixed contracts. Okay, we'll give you this much money, or how do we ensure that our supply is not being supply is not an issue. I understood the demand is there for us. So how do we ensure that supply is also going to be there for us?
Right. So great. So our operations is a night car operations, and
Okay.
Ola and Uber generally is a day car operation. So the inventory is automatically fully utilized when it comes to us. I think this is the most easiest answer.
Oh yeah, fair enough. Like okay, that helps a lot. So yeah, that's it from my side. So all the best. So thank you so much.
Thank you. Thank you, Darshilji.
Thank you, Darshilji. Kanchanji, please go ahead.
Hello. Hello.
Yeah. Hi, Kanchanji. Good
Yeah.
evening.
Hi. Good evening. So I wanted to know who are your top five clients, and as you mentioned earlier that you are planning to penetrate into southern region, but there are already many players in southern region. So why they will entertain you to be there?
So one is the unique business model that we have. Second is the tech that we use. Third could be we are one of the top performers in the country for some of our clients. So it's a very easy thing for us to penetrate with them. And fourth important point is that they are massively growing. So their demands are increasing. It's not that they have a fixed pie and I'm going to eat someone else's pie. So their demand is continuously growing. They are having more and more locations, more and more employees, because these are all blue chip MNC clients. You can pull their balance sheet. You can see what their growth has been in number of employees year on year. You'll see that they have been reporting consistent growth. And when they grow, we grow with them, is what we are trying to say, Kanchanji.
Thank you so much.
Thank you.
Thank you, Kanchanji. Simranji, please go ahead. Simranji, please go ahead.
Hello.
Yeah. Hi. Hi, Simranji.
Hi. Yeah. Am I audible?
Yes. Yes, you're audible.
Yeah. Yeah. Sure. Thanks for your time, sir. So, I wanted to understand on your supply side, which you rightly mentioned that employee transportation is more of a night market. I want to understand whether these drivers are they exclusively working for you, or are they sweating the asset on the daytime with the aggregators, and in the nighttime they are actually working for you?
So it could be a hybrid thing. Like there are drivers who are only working in the night with us, and then there are drivers who would do their daytime duties with Ola and Uber, and they would just take one or two. They would just do one or two duties with us in the night, and they would go home. As I mentioned, we have peak loads, so in those peak times, we also need such drivers who do only one duty with us and they go. So if they're sweating their asset in the day for Ola and Uber, they can come do one or two trips with us and they can go home. And there are also some drivers who don't want to work with Ola and Uber for their own reasons. So they work with us during the night for the whole night.
Understood. So, amongst the 2,500 odd that you mentioned on your presentation, how many would be the exclusive drivers on your company, or are there any exclusive?
We do not have any exclusivity as such that you have to work with us. But what we take pride is in that if that 2,500 vehicles will be available to us at a given point in time if we want them.
Sure. Got it. Got it. So what has been the churn month on month or year on year? Can you just give me some
churn in terms of the vendors, drivers?
The drivers.
So their driver stickiness is really high in our case because our payments they here in any for any of these drivers, they are really small players and for them payment really matters. So generally with us the stickiness is there. Only cases where the vehicle goes out of the market or it goes in maintenance, or if the odometer reading is above 50,000 kilometers and is not able to replace his car, give us a quality vehicle. In that case only we part our ways with the driver or the vehicle owner. Otherwise we have a good stickiness on the driver side as well.
But don't you have a number like a 10% churn month on month or a year on year?
We don't actually calculate that because mostly our fleet is planned, because it's not like a B2C business where churn is important, where attrition is important. So for us that metrics is not calculated on a day-to-day basis, because we can plan our inventory depending upon the client. We don't need to have available inventory or show it. Like I don't need to show my client first that, hey, I have 500 cars, how many cars will you take?
No, I get that. What about the additions? How many additions do you do month on month in terms of drivers?
So it depends on it depends upon the contracts that we add. So if I add a new contract, say of 50 odd, the client needs 50 odd cars a night, I would have a week or 10 days to prepare myself and have those 60 or 70 cars onboarded in my pool, and then they will be they will be dedicated to that particular client.
Understood. So last question would be on the EV adoption. I believe the payback period for EV cars has actually come down over the period of time.
Yes.
Compared to the ICE cars.
Yes.
ICE cars. So yeah, please. So
yes.
Can you just talk about how much of right now I believe you mentioned somewhere in your presentation 20% is currently your EV vehicle size.
Yes.
What is the percentage that you're planning to grow, like with the overall size of your fleet?
Yeah, in next 3 years we want to be 50% EVs. But only challenge with the EVs is that you don't have larger vehicles right now, like tempo travelers, like Tata Sumos, Boleros, and these are the vehicles which runs a lot in our employee transportation segment. So smaller vehicles, we are already seeing that 50%, 40%, 20%, like depending upon different client locations, we have already converted the sedan vehicles. But for the bigger vehicles, we are still having a challenge because the product is not there and not evolved.
Sure. So previously, one of the participants had asked a question whether you have done any tie-ups with any of the NBFCs. So falling back on the same question, if you're planning to increase your fleet size up till 50% in the EV segment, why not tie up with these NBFCs or other financial services companies?
So we have good EV partners, like I don't know if you've heard of Everest or not. They are also they used to be one of our vendors. And similarly, we have good EV partners, vendors. Here they are not owners, and these companies are well funded, and they provide us these cabs on our use case basis, and that helps us to kind of leverage our growth with EVs as well. But of course we can take your suggestion and we can definitely look at this when we look for this growth on the EV side, for tying up with a NBFC or a financial company who can help our partners avail these loans.
Sure. Thanks. That's all from my end. Thanks.
Thank you.
All the best.
Thank you, Simarji.
Thank you, Simarji. Nishanji, please go ahead.
Hello, am I audible?
Yes, Nishanji, good evening.
Good evening, sir. Thank you for the opportunity to raise certain queries. First of all, sir, you mentioned that you have been growing at 30% CAGR. How much of this growth is being driven by the new addition in terms of clients?
So largely this is because of the new addition of the clients only. and that is the new addition of the clients. And also with some of our clients, we have gone to their newer locations. Like, say for example, I'm just giving an hypothetical example. Say we were working for them in Kolkata, now they gave us a contract in Bhubaneswar. Or we were working for them in Bhubaneswar, they gave us a contract for Thane, Bombay, like that. And then we also have added newer clients in different geographies in the northern India, as I mentioned previously in my answers.
Sorry, sir, I have joined a
Yeah.
little late, so I
So
may
no
have
problem, no
missed out
problem,
those.
no problem.
How many new clients that we have added in last 2 years?
Uh, I think we have added 4 or 5 new clients in the last 1 year.
And those clients would be multi-location clients,
Yeah,
or
multi-location.
those would be individual one location client kind of a.
So generally what we do is as I mentioned, we don't take the business for pan India at one go for a client. We go location by location. That is our strategy, because this is a very operations heavy business. You need to be reliable. You need to make sure that your SLAs, your KPIs are being met consistently. And it's so once we stabilize operation in one location, then we go for another location.
No, I'm pretty understanding that, because the way I'm looking at it, if you are adding a new client, one location is being added, and if we fulfill and if we match their requirement very well, then they will be more than willing to us give more business in the other location. So I'm just trying to get how much of mining is already done in the existing clients. Say, for example, one client we have reached out to all of their location, then
No.
it's more like getting the growth from newer clients. So just wanted to understand from that perspective that how much in terms of the region reach that we have already achieved with the existing clients, and with newer clients, what is the status?
So both for the new clients, we have the complete headroom, but even for existing client, like if this for one of our clients, they spend about 500 odd crores annually, and we only do 5% of that as of now. So uh, that is the kind of growth that you have with the existing clients, number one, or the headroom for growth. And for the newer clients also, they are fairly large. Like they have operations in almost all the tier 2, tier 3 cities. So I was just mentioning that we have backed Flipkart as one of our clients. So Flipkart is present almost now in every tier 1, tier 2, tier 3 city. So you can imagine the kind of snowballing that can happen in that place. And the second biggest client that we have acquired is Teleperformance. So we started their business with Noida. We have now taken Gurgaon, we've taken Delhi, we have taken their Lucknow business, and now we are moving towards the western side also for them. So it eventually happens, but you need to stabilize your operations. You need to make sure that your KPIs are being met, as I mentioned. And once you do that, probably growth is not an hindrance.
So it's the geographical expansion that we are looking at it would be relation to the clients where we are already present, and those clients are in those geographies. So it becomes more easy to penetrate in that, because we already have a fair share of say with the client, and we have to set up more of a supply chain in that region. So it becomes much easier for us to grow in that region. So that's where the strategy is in terms of geographical expansion.
Exactly, that's one part of the strategy. And the second part is, of course, penetrating the new clients as well in the newer geographies. Like in southern India, we are not present. So there we will have also the sales team who can go to new clients, who can make a compelling proposition of what we can offer, who can showcase our performance with our other clients. And of course, we offer our new clients also to do a ref check for us with our clients, and we take pride in that particular thing. And I am, and I can say that we say very proudly to our clients also that don't only take my feedback from my client, but take my feedback from my competitor as well. So if my competitor says something good about me, that means we have achieved something good for ourselves.
And sir, in terms of market share or the client wallet share, as you mentioned, for one of the large client, you would be having probably 5%. If you have to do a little bit comparison, what could have been the highest share for that one client, or for any other smaller client or an average client for competition also? Like what is how much big you can go to a particular client in terms of wallet share?
So you can very easily grow up to like 25%, because generally in pan India, if they have four different suppliers, and they are very well diversified, because generally these bigger clients, what happens is that maybe for two or you can't do everything for them, because they have very different requirements in different geographies. So maybe we are good at something, so we can do in two three geographies. Somebody else is good in something, so they can do in the other geography. But what we have seen is like, uh, for this one particular client only, we can grow up to 25%, which is about 150 odd crores, or 125 to 150 odd crores of top line with that one single client.
Okay. And secondly, on the region side where you're expanding, assuming that the one of the existing client is already there in that region, and you have a fair share to say that they will give us the business. But from a supply chain side of setup, how much time you take to start your business in that region?
See, it depends upon the number of cars. So it is directly proportional to the number of cars that you need. Generally, we ask for 15 days to 1 month before onboarding, because we have to do medical checkups for the drivers, new drivers. We have to do background verification for the drivers, criminal checks, vehicle checks. It takes a little bit of time. It is not only managing the supply, but once we have onboarded the vehicles also, then there is a 10-day process. So we generally ask for anything between 15 to 1 month. That is the minimum that we would need from our client if they want 100% compliant, 100% quality driver verified fleet.
And how much cars that you would be looking to get it from that client? I mean, that is the minimum fleet size that you would look for that region to enter that region or something like that.
So I would say minimum 50 to 70 cars.
And break even would be at what level?
So since we are an asset light model, there is no break even kind of a situation. Just there is like, if we bill a client 10 rupees, our vendor contract will be at 8 rupees. So we will make 2 rupees on that. I'm just giving you a hypothetical example here. So if we are, so that is, we from day zero, we are profitable.
Thank you. And last question from my side. Sorry, as I joined a little late. Whether it's a completely whether it's a OFS or a fresh issue, just
It's a
want to.
complete fresh issue. Neelam can take that.
Yes, sir. It is completely fresh issue.
What is the size? Sorry.
27 crores.
And where this will be utilized, sir?
For working capital, funding the working capital of the company.
Okay, sir. Can you just explain a little bit on working capital cycle? This would be the last question for myself.
Ankit, can you please take this one?
Sure. So working capital as of now, so suppose I will just like to give this via an example, highlight you this via an example. Suppose we onboard a client and we perform services from 1 to 30th of this month. So we will bill him on the next 10 to 15th of the next month, and his payment cycle would be around 30 to 45 days, where it would take another 1 month or 45 days or for him to pay us. So this takes somewhere around 2.5 to 3 months for our billing cycle, where client pays us after 2.5 to 3 months. And whereas on the vendor cycle, when you say vendor usually takes payments in same day, alternative day, 7 days, 15 days, 30 days. So an average vendor pays out takes a pays out of around 15 to 20 odd days. So this is the gap where we want to fill this working capital requirement, where the requirement is of 60 to 75 days is of working capital, where we will fund ourselves and like to pitch for new clients and expand into new geographies.
Thank you very much, and all the very best for your upcoming IPO. Thank you.
Thank you, Nishant.
Thank you,
so much.
Nishanji. Thank you.
Thank you, Nishanji. Himanshu ji, please go ahead. Himanshu ji, please unmute yourself and please go ahead.
Hello. Good afternoon. Am I audible?
Good evening, Himanshu ji. Yes.
Yeah. Like in manufacturing industry, we have something like capacity utilization. Over here, how are we utilized?
So one is that over here there is no, since we do not have any fixed capacity, like if I would have been having these assets on my books, then I would be a little concerned about asset utilization. Here, since we do not have assets on our books, it's a asset light model. So then there is, so our fleet is directly tied to the demand that we have. So we do not have any fixed commitment with our vendor partners or our drivers.
So how you gauge, yourself, as per as per the demand is concerned?
How do you
gauge yourself?
So as I said, these are long contracts that we do with our clients. We generally know what is the kind of vehicle requirements that will be there. So we gauge our demand on day one, that they'll need 50 cars, 70 cars, or 100 cars, and basis that we bring a supply, and we manage that supply and bring it for our clients' requirements.
Like, okay, fine. And what is the margin which we earn over here? EBITDA?
So again, we do not have large depreciation or interest. So Ankit, can you please take this question?
So for the last year, if we say our EBITDA was somewhere around 20%, and for this for half yearly, this is still somewhere around 16 odd percentage, and we strongly believe that this will be in the same zone in the future coming years also.
So how do you break up? Like you suppose one ride cost you around say take 100 rupees from the client. So what is your cost and what is the cost of the since it's asset light, so the third party people, how do you know?
Yeah, so generally we bill 100 rupees to our clients, and as Ankit said, so we pay, say, hypothetically 75 rupees to our driver partner. So that 75 rupees is our direct cost, and then the driver partner takes care of the fuel maintenance and all the other costs.
Okay, fine. Thank you.
Thank you. Thank you, Himanshu ji.
Thank you, Himanshu ji. Ashit, please go ahead.
Hi, Vikas ji, how are you?
Good, Ashit ji, how are you?
Very well. First of all, congratulations for your upcoming IPO.
Thank you, Ashit ji. Thank you so much.
So I have few questions. So to start with, since you already clarified that TAM for the company is much bigger in excess of 25,000 crores or so. So I just want the clarification that is this TAM what you are mentioning is for the night market or is it a total transportation market?
It is for the night market.
It is for the night market.
Yes.
Got it. Secondly, I wanted to understand a little bit on the statistics. So on an average, we do about 200 rupees per seat.
Yes.
Or that is a lower. So what's the range? What's the lowest and what's the highest so far? What we are doing per seat?
So even in a smaller city, for like a Chandigarh or something, you can do it 130 rupees also. And for a larger city, like for a city like Bangalore or a city like Bombay, where traffic congestions are really high. So what happens there the distance does not matter. The time taken to travel is 2 hours or 3 hours. So your car can only do 2 duties or 3 duties that point in time. So generally,
yeah, but would that matter in the night zone also?
in the night
Traffic.
also, the distances are very high in Bombay and Bangalore. So even in the night, probably if you go in the highways, like what we have seen, if you take in Bombay, the highways are completely they have a lot of traffic. Generally, it's not there in Bangalore, to be honest, in the night. But in other cities, there are traffic on the highways in Bombay, and in fact in Delhi also. What we have seen is, like, if you go from Dhola Kua and stuff like that, these areas, Delhi NCR, we see that in the night time there is significant traffic sometimes. But of course, we take as when we price it, we take all the factors into consideration. For example, in Delhi, if someone is coming from Greater Noida to, say, Connaught Place, of course the number of kilometers will be very high, and the time taken to travel also will be very high. So my car would be able to do 2 or 2.5 trips a day. So that is how I would like to price my client also, because I would like to make the best value of the car that I'm putting on his services.
Got it. So would it be fair for me to take an average value of 200 per seat?
Yeah, 200 is the average value that we see as per seat.
So based on that, suppose if I divide the numbers what we have done today
Sure.
by 200,
Yes.
so we've done about million plus seats.
Yeah, we have.
And how many rides it would be for this million seats?
We have done about 400,000 rides.
So that's about two and a half average seat per ride.
Yes. So I said our
But
utilization is nearly about 60 to 70%.
got it. Got it. Got it. Thanks.
Thank
And the last question would be for the market share. So how would you see yourself? Because since the market is quite large, and today we are what we are doing is almost insignificant in terms of what the market is today. So what do you feel like how what could be our market share from 3 years top or maybe 5 years down the line?
See, it's I I can say that we can't, I can give a lot of forward looking statements, but it will not be right now. I believe that we are well poised for this growth this industry is having. We are having a 30% YOY growth over for the last 2 years, and we believe this growth is going to be there, and we are adding more and more clients, and we are certainly there to grab a major market share in the next 5 years in the employee transportation space, and we'll emerge as one of the significant players in the industry.
Got it. And since the market is so large, why only we are targeting 30% growth? Couldn't be, I mean,
No,
is
as
there
I
any
said,
constraint?
no, there is no constraint. But as I said, the growth is not a constant. It is for me to not. It is for us as a team. We don't want to give any large statements as of now that we can be like 50% of the market or 20% of the market or 10% of the market. What we believe, as I said, we are poised to grow even beyond 30%, 50%, 60%, or 200% for that matter. But we are well positioned now. After the IPO, we'll be well capitalized to take care of our working capital needs also. But of course, there is nothing that stops us, and we'll keep on growing. Like, just don't want to tag a number right now that
I
what would be our
understand.
growth.
I understand. Thank you. Thank you, Vikasji. Thank you so
Thank
much
you.
and
Thank you,
all the best
Ashitji.
to you.
Thank you, Ashitji. Thank you so much.
Thank you, Chidji. I guess we have covered majority of questions, so we'll conclude now. Thank you, Vikasji, Ankitji, Neelamji, for giving insights about the company and IPO to the investors community. And thank you, investors, for joining. Best wishes to Voler Car team.
Thank you, everyone. Thank you, Pooja ji. Thank you, everyone, for joining, and thank you for your questions. Thank you, Neelam ji. Thank you, Ankit.
Thank you, everyone.
Thank you.